So that's the bigger challenge, right? I think I alluded to that in my opening remark. You do not have, democratic access. Like stock market, you can go and you may not get it very early, before pre-IPO kind of allocation, but once a stock trades, if you want to buy a certain amount of stock, you have equal access like anyone else out there. But that does not exist. Let's take if someone is a high net worth individual, for them to be part of a venture capital fund, SEBI talks about AIF, right? Alternate investment fund. You need to at least invest 1 crore of rupees, primarily. The minimum ticket size is 1 crore of rupees, right? So again, the VC may be interested in taking your money, may not be interested in taking your money. There are limited number of VCs that operate, so it becomes very difficult. Now, the other next option, if you're not going to be part of a fund, is an angel investment option. Again, these angel investment networks, sometimes you may get an opportunity, sometimes you may not get an opportunity. Like, Indian Angel Network or Let's Venture, these are all platforms, that bring angel investors together. Now, if these two options are not available, then on your own, you're able to attract entrepreneurs to come to you for money. And that happens with few, not many, right? So that's another difficult option. So given all these, obviously obstacles, not many people have access, to alternate investments. And that's the reason why, if you were to democratize and potentially, even regulators could wake up and also say, hey, this is another way of giving access to some of the qualified investors, to participate in private markets. So the options are fairly limited, but there is humongous appetite and demand, from individuals, while fully being aware of the risks, because these are private companies. They're very highly risky asset class. So that's the scenario today.
Absolutely. To add to what Sateesh has said, if you look at the wealth creation opportunity or the returns opportunity from this asset class, you will see that substantial amount of value creation happens before a company becomes a public company or a listed company, right? And so how do people get access to that stage of a wealth creation journey of a company becomes an important question. Then if you look at a recent survey of, I think Praxis published this, of where family offices and, ultra high net worth individuals are deploying, about 20% of their allocation of their wealth is going into this asset class, and actually delivering about 30% of the returns that their portfolios generate. So it's actually returning substantially higher returns. Now, with that, you think you should think this kind of returns and this kind of wealth value creation opportunity should be available. Sateesh just democratized, and it should be available to a wider set of people. And three things need to happen. One, you need to have access. You need to have transparency, and transparency often comes from data. And you need to have efficiency. Efficiency comes from data and from systems. So essentially, the opportunity here is there is still a gap in all three compared to the public market: access, transparency, and efficiency. And that can be created by systems and rails in this sector. And that's the frame through which we look at the opportunity in the private markets.
Revolutionize your startup's equity management with Qapita. Request a demo today.